U.S. home insurers suffer worst loss in century, okay? Let's go through this one here. Yep. So U.S. home insurers suffered $15.2 billion of net underwriting loss last year, the worst since at least 2000, and more than double the previous year's losses, driven by natural disasters, inflation, and population growth in at-risk areas. Keyword, population growth in at-risk areas. What is population growth? Where did it go to? Florida. What's at risk? Florida is one of them, right? Hurricanes. Robert Gordon highlighted that escalating coverage demands and skyrocketing insured losses are due to more homes in high-risk areas and rising construction costs. He noted that the increasing frequency and severity of weather-driven losses as a major uncertainty affecting the market, regulatory constraints in states like California, delay pricing approvals, the fires in California, exasperating market deterioration. Gordon urged stakeholders to work together for sustainability. By the way, that's a key word. Stakeholders, meaning the Department of Insurance and the insurance carriers, you guys, and the state, you guys got to, because this is not like insurance, you're bad people, you're so expensive. They're not making money, and they're leaving state. So they're saying, listen, you don't want us? We're out. We're totally fine with this. It's not like we're negotiating because we're trying to get the better deal. To work together for sustainability, while Minnect pointed out regulators struggle to balance attracting insurance and maintaining affordability for consumers. So this is a problem for both sides. States fear insurers leaving. Insurers fear that state's going to demonize them so much there's no profit margin for them to even stay in the states. That's what's going on. Tom, your thoughts?
So one of the things here, California delaying pricing approvals. When Pat just talks about the Department of Insurance and the insurance regulators that are at the state level, in California, they set what's called the span. It's a pricing span that they allowed to raise rates or here or there, because what they're trying to do is ensure that there's affordable insurance in California, and that maybe pick a company, insurance company A is doing business in Galveston, Texas, and there's a lot of risk down there because it's on the coast where the hurricanes come. And then they're also doing business in, California, in an area not affected by wildfires. They don't want the insurance guys to raise the price in California to help subsidize Houston and go back and forth, because the insurance people are running a nationwide business. So you also have the state regulators delaying approvals, and you've got the person that gets stuck in the middle and screwed is the consumer. The consumer's trying to get coverage for their home because they have to get coverage for their home because they have a mortgage on it. And Wells Fargo says, hey, you have to maintain loss coverage on your house and give me the policy number so that I know that you've got coverage. So if there's earthquake or fire or whatever, it's going to pay to rebuild it. Well, then the insurance people are going, well, I got to raise the rate on here so I can make a buck. And the other part of it, here's what's chasing the insurance carrier. Cost of labor and drywall and common construction materials are up 30% in 3 years. So what does that do to the cost to the insurer if your house burns down? It costs them more to rebuild it than they had estimated when they told you it was $300 for your insurance. Yeah. So they lost money on the policy and didn't have the money to do it. I mean, we're all in insurance here, and I think there's a lot of perspectives here at the table. But the one that really gets nailed is the consumer, because in California, they'll delay the pricing approval, and then suddenly you have a 20% year-over-year pop, which happened in car insurance, specifically in California.
Go to the number. By the way, do you know last year, out of all the costs that increased the most, everything, payment, food, clothing, auto insurance, home insurance, out of all of them, you know what increased the most last year price point wise? Did you see the number? Car insurance up 21%. Rob, can you pull this up? Just tap in car auto insurance 21%.
Just moving here, and Pat, it doubled for me.
Damn straight, and that's almost single year, Pat. Pat's talking about single year, not multi-year. When we talk about 30% inflation in the grocery store,
look at that.
That's 3 years.
February 2024, the average cost of car insurance in U.S. has increased 21% year over year, according to the U.S. Bureau of Labor Statistics. And by the way, when they broke it down, so let's just say, Vinny, you're running $1 billion year business, okay? And you look like a CEO, so you're running $1 billion year business the way you're dressed, okay? And all of a sudden, you notice that, the amount of cars being stolen has skyrocketed, where you're having to pay insurance out of your money that you have in your account. It's being depleted more and more and more and more and more. And you notice, man, the cost for this is ridiculous. So You increase 5%, you're breaking even. You increase 10% to make 5% profits, you're still breaking even. You increase 15%, you're still losing 6%. You increase 21%, everybody says, why did you increase it 21%? And they say, guys, we're not making money. So then what's the next move you're going to do as a CEO? You're going to go to your guys and you're going to say, show me the best margins by state. That's exactly what you're going to do. What state do we make the biggest profit margin on? And you're going to have an Excel spreadsheet that breaks down all the states.
And we're moving.
And no, you're actually not moving. You're actually doing the following. So it's going to say, let's just say Oklahoma. I'm making up numbers. Your profit margin there is 29%. Kansas, 27%. South Dakota, 22%. And you'll rank the top 15. You'll notice at the bottom, it'll say California, minus 28%. Texas, minus 27%. New York, minus 26%. You have to sit there and say, guys, we're doing one of two things. Either you increase the rates and be a niche competitor where you're purely in the niche insurance business. You're not trying to be to everybody, and you stay in that state. Where you decide, like in insurance, there's companies that you can go and look at term insurance companies. Some companies sell term insurance so cheap, but on the back end, they're not doing anything. But it's so cheap for healthy non-smokers, and that's it. Super expensive for anybody about 45. You get to decide who you're going to make that insurance cheap for and expensive for. Yeah. And you'll say, guys, the only thing I'm interested in giving term insurance policy for, if you're under 40, non-smoker, you're not heavy, I'm going to give it to you cheaper than anybody else in the market. What if I'm over 40, heavy, and I'm a smoker? We're going to be the most expensive in the market. That's all these guys are going to do. Florida, California, some of these states with high risk, or some of these cars that are being stolen in Chicago, Illinois, you're simply going to say, we're not trying to win that market. Increase the price, let them leave us to somebody else. You have to make that choice, but it's purely economical. FYI, to those that are bashing insurance companies, I'm not in the auto insurance space. I've never sold an auto insurance policy, but I've had auto insurance over the years. You don't want them to leave your state. That's all I'm going to tell you. You do not want them to leave your state. So if in your city, your zip code, there's a lot of cars being stolen, the Department of Insurance, you call in to get an insurance policy for your car, and there's a lot of theft in your city because crime is bad, because the sheriff you voted for is soft on crime, unlike Sheriff Judd. You know what happens to your auto insurance? Department of Insurance simply looks at how much theft is there, twice the price. So it also matters how you vote locally in your community to make sure crime is down, so auto insurance prices go down. It matters. All of this matters. Adam.
So, I've been in the insurance industry for 18 years, but, I do something different.
You've never told me, but this is good to know.
Thank you.
Crazy.
I'm glad we just met.
Yeah.
But what I do is something different than what you guys have done, because I do essentially the reverse side of the insurance. Here's what I've learned about insurance.
But it's very important on breaking that down to the audience so they know it's math.
I will, and I'll break that down. But insurance at the end of the day is what I would call a necessary evil. Damned if you do, damned if you don't. Whether it's life insurance, whether that's health insurance, whether that's car insurance, whether that's home insurance, it's a balance. It's, okay, should I get this? Can I afford it? Do I need it? What's going to happen if I get in a car accident and I don't have insurance? Or am I going to self-insure? What's going to happen if I have kids and I don't have life insurance and God forbid something happens? Oh my God, what's going to happen to my family? What's going to happen if a flood, a hurricane, a storm, a tornado hits my house and I don't have insurance? Can I pay for it myself? Should I self-fund it? Should I pay the premiums? What's going to go on here? It's this balance that you kind of have to grapple with, of whether you want to pay out of pocket or pay the insurance company. Now, the insurance companies have also a balance that they need to sort of figure out, and that is how can states attract insurers but also maintain affordability for customers? Now, in my business, in the life settlement world, here's the conversation I see every single day. There's something called COIs, cost of insurance increases. And I get calls like this. Hey, man, I used to be paying $1,200 a month. Now they want me to pay $2,500 a month. Hey, man, I used to pay $5,000 a year. Now they want me to pay $25,000 a year. And I sit there and I say, okay, well, what do you want to do? And they say, dude, I want the insurance, but I don't want to pay these premiums. It's crazy. So that's how my business basically brokers a deal and buys them out. But the whole premise of having insurance is because, hide your kids right now, because shit happens. It's, oh shit, insurance. Oh shit. The question you need to answer is, do you want to pay for it on the front end or the back end? The insurance is the front end, or God forbid something happens. Oh shit, something happens. They say that shit happens all the time. Are you going to pay for it on the back end? So
got it.
It's a necessary evil one way or another.
Now, let me talk about something very important, near and dear to two men at this table that they have to be ready for. And this is serious. This is a crisis. So I'm calling an epidemic. So let's go through it. 56% of people would RSVP no to a close friend's wedding to save money. Okay? This is terrible, Vinny, Adam. Which means 56% of people you invite to your wedding, they're going to be like, no, bro, I can't make it. Here's a $20 gift card to Starbucks. A Bank of America survey reveals 56% of Americans would decline a close friend's wedding invitation if they couldn't afford it, with older individuals more comfortable saying no. Gen Z and millennials are less likely to skip weddings compared to Gen X and boomers. Experts suggest ways to manage wedding costs, such as selectively attending events. Consider which wedding events are must attend and which ones you could skip to save costs, said Allison Coleman, wedding expert and vice president of brand marketing at Zola. To further curb expenses, pooling money for group gifts and sharing accommodation costs are recommended. Ask other guests if they'd be willing to chip in on one of the pricier gifts. By the way, that's what David did. Remember, David's like, we want to get this for Sam. Advises Hannah Nowak. He probably read this article. Senior editor at The Knot. Sharing a hotel room with a friend can also make attending more affordable, she adds. Adam, does this concern you?
This is very concerning for people out there. I'm sort of past my influx of wedding phases, but this is actually very serious, especially if you're in your early 30s. Let me explain why. So I grew up here in Miami. All my friends, I'm still friends with all of them. Everyone got married in like a 2-3 year window, right around age 30, give or take. So what happens is it's not just the wedding. This is something that every guy has to consider out there. By the way, typically I say the guys, because you're the one that's paying for your girl to come with you. You're the one that's paying for the flight, typically. You're the one that's typically given the gift. Obviously, the women will pay sometimes as well, but it's usually the man. So hear me out. But it's not just the wedding. It's a three-pronged situation. You have the engagement party, you have the bachelor or bachelorette party, and then you have the wedding. So this situation between Greg and Lisa is going to cost you, give or take, $3,000 to $5,000 each wedding. So you have the bachelor party, you're probably going to spend $1,000. You have the engagement party, you're going to spend a gift. Where is it now? Where's the wedding? Is it a destination wedding? Is it in town? Are you getting a gift? If it's a destination wedding, do you actually have to give a gift? Because I just spent $1,500 on hotel, flights, everything like that. So each wedding is going to cost you several $1,000s. Now here's the thing: how many close friends do you have? I went through a time span where literally every single weekend I had an engagement party, I had a bachelor party, I had a wedding, where I was like, I'm spending $25,000 over the next 2 years on weddings alone. And so you have to make a decision. So what I said was, listen, bro, I'm going to come to your wedding. I'm not no engagement party, or I'm not going to give a gift for this. Or if the bachelor party is in Miami, I'll go. I'm not flying to Vegas for the 15th time. So you have to make a decision what you can afford, because if you just do every single event, give a gift and get flights, hotels, everything, you will go broke.
Oh, especially when that's the worst when somebody's like, yeah, we're going to go to Bora Bora for the wedding and we're going to be on horses. No. And here's my thing. Like, you guys, by the way, yeah, we're going to ride horses. No, I'm not.
Horses and Bora
I don't know
Bora.
what that time, because somebody tried to invite me to a wedding and they're like, yeah, we're going to skydive. And I'm like, no, I'm not doing none of that shit. I'm going to send you cash. You guys are talking about insurance. Adam, you pay all that money. Yep. Shouldn't there be an insurance for weddings where it's like, listen, if you jerks get divorced in a year, I want money back. I want Adam, Pat, wedding insurance.
Like a $3,000 term policy. If they get divorced, you get the $3,000.
I get the $3,000 because guess what? Then that'll give them more incentive to, like, I'm gonna leave you. Like, no, honey, we're gonna have to pay all 200 guests all their money back. Let's stick it out. It's ridiculous. It's so like, and so people know now. People
Very
know now.
strategic.
Pat, just send me cash. Like if I was getting married, but guys, none of you show up. Just send money. Like Zelensky, send money. Give
So that's
money.
like
Give money.
buying puts to protect against a divorce.
You have to be very strategic these days.
Yeah.
So didn't we cover the other day how
I don't want to stay on this for too long.
people are doing-
Send
Give
me
us your-
money.
There's a
Send me
simple
money.
solution. I have a simple solution. Become a licensed pastor. They throw in a free lunch.
Yeah.
There you go.
Send money, please.
Look, we'll simplify this and we'll move on.
Yeah.
I said this, I think it was 4 years ago or 3 years ago. Mario is the last wedding I'm doing that I'm a best man for. From there on, I'm retired. I don't want to be a best man. I'm not a good best man. I'm just going to be the guy that's sitting on the sideline. I show up to your wedding, all of that stuff. And we get so many wedding invites nowadays. I love it. You guys are amazing. Some of the wedding invites want us to go to Greece, want us to go to Australia, want us to go out to all these different places. Congratulations to you. We wish you guys nothing but the very best. But unless if it's a Armenian, Persian, Assyrian wedding
Andy.
that is local, okay, that's going to have 400 or 500 people that are going to be dancing to that kind of music, that I can come with a party of 5 that we can dance collectively,
Yeah.
I would entertain it. Aside from that, God bless you.
Yeah.
Have a great wedding, whoever it is. I actually subscribe to this article.
PBD, I just want you to be looking for the RSVP for a Jewish wedding that might be coming up in the next
That's
year.
an
or
expensive
5.
one.
That's
Those
expensive.
weddings, they ask you for like a house or mortgage payment
Yeah.
for the first 6 months.
Maybe you throw the party at your house. You never know.
I don't have a problem with that. That I will entertain. So I got an update for you. Today at 6 o'clock p.m. Eastern Standard Time, I'm running this webinar, free webinar called the AI Revolution. This thing is already, it only limits, we upped it from 3,000 to 5,000. It only limits 5,000 people to be on. 20,000 people have already registered to get on. That's the QR code. You will all get a 30-page white paper that we've put together. We put 300 hours into this. On top of that, I will be announcing 3 new speakers that will be at the Vol Conference at the end of this webinar.
Nice.
The only way you get this white paper is by you being on this webinar. The QR code right there is for you to get registered for it. Go out there and register, but there's a couple other things I want you to do. Register, and at the same time, once your name is in there, go on your phone and add it to your calendar reminder, not at 6 o'clock, 5:45 with a 15-minute reminder, because I know exactly what happens when we do these. While we go live, we're going to get thousands of emails of people saying can't get on, and it's because it's only limited to 5,000 people to get on. That is intentional. That's the QR code. Get registered. We have a lot to talk about. It breaks down every single time we went through a certain industrial revolution, things that changed, what the fears were, what industries were disrupted, how many millions of jobs were lost in a certain sector, and how the same thing is happening with AI. But if you don't know how to prepare for it, you're going to take a hit. Whether you're an employee, entrepreneur, executive, this is the webinar for you. Go to that QR code, get registered. We'll have that tonight, again, 6 o'clock, Tuesday, July 30th, Eastern Standard Time.
So if you like this clip and you want to watch another one, click right here. And if you want to watch the entire podcast, click right here.